Hello and welcome to Pro Trader Strategies Market Commentary for Friday, December the 14th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Across the pond, we finally started getting some flash estimates. Now remember, our most important economic data points is in the form of ISM, the Institute for Supply Management. Over across the pond, their most important data points come out of the flash estimates. We get flash estimates as well, but because of the ISM being more important and basically a leader ahead of this one, we look at that one. So, across the pond in Europe, French flash manufacturing PMI came in below 50 at 49.7, expected to be above 50, which was expected to be at 50.7. Now, important to note about this PMI, Purchasing Managers Index data points, that is the purchasing managers, the guys at the manufacturing plants that are purchasing the raw materials as inputs for the production cycle. Now, it is their outlook on the economy, which discerns whether or not it's above 50 or below 50. Above 50 means expansion, below 50 means contraction. So French flash manufacturing PMI below 50 is contraction. And then we also got their services PMI, came in at 49.6, expected to be 54.0, much lower than expected. Not good on the French PMI numbers. Then we got German flash manufacturing PMI in line with expectations at 51.5. And then flash services PMI out of Great Britain came in at 52.5, lower than the expected 53.4. The greater European area flash manufacturing PMI came in at 51.4, expected to be 51.9. And then flash services PMI for the European region came in at 53.4, expected to be, came in at 51.4, expected to be 53.4. So all of the European flash manufacturing PMIs and flash services PMI pretty much missed, except for the German manufacturing that was just in line with expectations. As a matter of fact, it missed by 0.3 of a point, so we could really say they all missed, even though that was pretty close for government work. All right, and then here in the United States, we got core retail sales in line with expectations at 0.2%. They revised last month's number on the core retail sales from 0.7 to 1%. So a nice increase there. And then we also got retail sales, which the core retail sales strips out some of the more volatile aspects of that data point, like automobiles. So with automobiles added back in, we got a retail sales of 0.2% and expected to be 0.1%. They revised last month's number up nicely from 0.8% to 1.1%. Capacity utilization in line with expectations at 78.5%. Industrial production increased to 0.6%, expected to be 0.3%, and they did revise last month's number down by basically that beat from 0.1% to a negative 0.2%. So that's not really too great there. And we also got our own flash estimates, both of them being above 50, so that's good. Business inventories in line with expectations at 0.6%. All right, now that could have been one of the biggest economic data point days that we've had in quite some time. Now that we're through that, let's check out the overall markets. We've got crude oil in negative territory, not dramatically in negative territory, but I really can't see a whole lot of strength in crude oil with those economic data points, especially across the pond. And with the French having their riots and everything else, I can't imagine that productivity is ramping up at all. All right, gold is coming off despite the fact that we're seeing the equities, the broader equities in negative territory and quite dramatic, as of this last couple of months, it doesn't seem like they're very big moves, but 300 points in the Dow is a pretty big move, and that's what we're seeing to the downside. That being said, we would think there might be a little bit of flight to safety here in gold, but the market is pulling it right down to that area where I talked about the 1225. I think it's going to migrate there before we see any type of move higher in gold futures. And then we've got bonds. They're moving higher. They're reacting as we would expect with the equities down, flight to safety, trying to put money in a safe haven. That's the bonds migrating back to their point of control, albeit I think the bonds are a little bit high for the interest rate environment that the Fed is talking about. The Fed's still talking about doing 2 more interest rate increases in 2019 at least. So bonds should probably start rolling over a little bit unless the yield curve is going to stay inverted, which is a signal to the Fed that they have over increased the interest rates now and the market is expecting a decrease going forward. So basically a signal to the Fed that, hey, watch yourselves. We believe you're overdoing it. Now, the VIX is higher today. The market higher on the day than yesterday. The candle looks a little bit negative, but that's because we saw some volatility spiking off of this economic data and the market's rolling over. Now, VIX is kind of like, all right, well, it's the same as we've seen time and time again. So this is, let's look at the Dow Jones Industrial Average, down about 260 some odd points right now, off of the lows of the day, but just not nearly recovering to make it look very bullish at all. That being said, I haven't really changed my assumption of this market wanting to stay within the value areas. If we settle outside of that value area, I might start looking to pull the ripcord on a lot of these, especially the way the market reacted yesterday. I was expecting a little bit more push to the upside, hoping we were going to get a settlement above some of these Fibonacci levels, which we didn't necessarily get. So that has caused me to second guess my market assumption, but it hasn't broken it yet. So I'm waiting for that. I haven't added anything because I'm still with my market assumption. I have taken a couple of things off like I talked about yesterday, and we'll talk about that here in a minute. So as you can see with the NASDAQ down about 60 some odd points, these are the Fibonacci levels I was hoping to get above yesterday. Didn't settle up there, which would have led me to believe the market was acting a lot more strong than what the economist and everybody else on Twitter is saying. We look at the E-mini S&Ps, you can see it went down and kissed the value area low again, getting overextended to the downside in that regard. I believing that we're still going to rally up. I needed to get above this Fibonacci to really start being more confident about that, the 23 Fibonacci extension. Rolling over right now, we haven't broken this bottom area, which has acted as support. I think that we're going to hold that. I don't necessarily believe that we're going to go down all the way to these 25, 29s in the E-mini S&Ps. It's not out of the realm of possibility, but I believe that the market is going to migrate higher. Having said that, many more data points like we got out of Europe here in the United States, that is out the window. As you can see, overnight inventory got really short, got flushed out coming into the day's session, but those economic data points really caused the overall market to start rolling over and losing that momentum. So we're going to have to watch this today and tomorrow. Because of the way the market's setting up really close to this bottom, I am full on long delta for the most part. So I am holding on to my position. I haven't added any short deltas because I want to see a little bit of pop before I start adding to that. I'm trying to peel off some of my long deltas in the form of short puts in order to thin out my portfolio a little bit. So with that being said, I had a bunch of working orders yesterday, and the only one that really got filled was this Philip Morris. And in Philip Morris, I went in and sold the, the December 95 calls in there. Sorry, this was one of the ones where I had on the calls for the downside. So I was short calls in here. I was short the January 90 calls, and I sold those at 82 cents, bought them back yesterday for 35 cents. And that being said, that even added more long deltas to my portfolio if I covered some of my short deltas. I was thinking, or if I covered some of my short deltas, that makes me longer deltas. And I wasn't able to get out of a couple of those other ones that I was looking to get out of, like Caterpillar, and I think it was Morgan Stanley, which is a thorn in my side right now. Banks are recovering better than the broader markets today, but Morgan Stanley still not really working out very well. After having it in profitability, we saw this market slough off last couple of days. Getting a bounce today. I think banks are overdone to the downside. I'm still okay with this strategy as well. So I'm short those 40 puts in Morgan Stanley. And I averaged those in, I believe. Yeah, so I sold them a couple of times. Just need a little bit of move to the upside, and I should be okay there. That's it for today. Check out yesterday's webinar on the long call calendar. It was a really good one. I talk about specific rules in and around that strategy that you need to use. Go through these steps in order to put this strategy into your portfolio. Okay, there's specific rules in and around that. You can't just do it around any stock or any type of environment. All right, I'm going to show you, or I showed you the ways to follow that. So check that out at protraderstrategies.com. That's all I got for you guys, other than have a great weekend. And if you can't take that, take it easy.